This podcast is brought to you by Independent Building Advice. IBA acknowledges traditional owners of the land and waters this podcast is recorded on. If you find this episode helpful, follow us for more so we can continue putting out free value for all homeowners in Australia. It really goes a long way. Enjoy the episode.
Hi there, welcome back to the Home Building Podcast. Today we're talking about something that's very interesting. Look, there's a lot happening on in the world at the moment. There is war going on. There's basically inflation. The government's looking at changing a whole lot of stuff with, capital gains tax and all sorts of fun stuff there. You've basically got oil prices and petrol prices going up, which is causing a lot of grief and expense there. Interest rates, all this kind of stuff is really going to making a lot of people worried about whether they should build or buy a home. And, you should probably be worried. It's something you should really be concerned about. Now, I'm the Director of Independent Building Advice. We provide independent building advice to clients, but today I'm talking more about property in general. I'm not trying to sway people one way or another. Buy now, it's a great market. Just trying to give people real information. And that's what the Home Building Podcast is about, but real information of whether you should buy, build, and what you can do about it in these uncertain times, because it is pretty scary out there and you do have to certainly be vigilant. So when it comes to property, whenever people are worried about the market or this uncertainty, even often sometimes it might even be an election coming up, people generally freak out and they get worried. So they sell property or they stop buying and they want to wait for that, that perfect time for the actual market to be just right so they can actually buy. It's going to be great. But the reality is interest rates are going to go up and down throughout. Let's say you buy a house and you have it for 30 years, they're going to go up and down a lot of times in that period of time. At the same time, though, that, other things will affect. There'll be wars that go on. There'll be unstable markets. There's all sorts of random, like COVID. Who would have predicted COVID happening in 2019? You wouldn't predict what the next year would be like, would you? These things are going to happen. And you need to, if you're buying property, you need to be able to give yourself enough buffer, right, within reason, to cater for the good times, obviously, but also the bad times. So let's say you're borrowing money from the bank and you're working out at, say, 6.5% interest rate or whatever it might be. Also think about what would happen if the interest rates went up. Let's say they went to 7%, okay? What would that look like? Or 7.5%? What would that look like for your life? If that is panic stations, oh my God, we've got to sell everything, we're in trouble, then that's not for you. Lower your budget. Stay within your means. There is nothing worse than owning a property and being a slave to your mortgage. It is terrible, okay? Now, interest rates can't go from 6.5 to 7.5 legally overnight, so you have got a bit of time if they were to change, but you want to make sure that you're not living beyond your means of what you're comfortable with, what you and your family's comfortable with. So before you go into buying property and before you go into anything, and we've said it before in other podcasts, is sit down and work out with your partner, if you're doing it with somebody else, work out what you would love to spend, right? What you're really comfortable spending, and what, if you're stretching, what's the maximum you would stretch you before you start looking at property. And that way, without getting emotionally involved and falling in love with the perfect place, that you actually have a really good game plan before you go into it, right? A game plan will save you in the end that you don't buy a property that you don't want, or you don't get caught up in something that's going to be beyond your means, because it's not nice. I've been there myself personally. I've bought a property and been a slave to the mortgage, and as soon as we sold it, we had a moment of relief and we bought something that was more to where we were at our point in our lives. And that's the thing, though, is that you've got to make sure that you're happy, you're living your best life, and you're not overextending yourselves. You've got to prepare for the worst case scenario. So that's my advice to most people out there. Make sure you're comfortable with it. However, when's the right time to buy? Now, that's a very big question. And obviously this podcast, we've got people in India that listen to this podcast. We've got people all over the world listening to it. So this is a very general advice here. But I'm going to refer mainly to WA, but this actually applies everywhere. As the markets go up and down and you can't predict them, there is going to be no perfect time to buy a house. There's none. There's no perfect time. If you wait for the perfect time, I can tell you now, in 10 years' time, you still wouldn't have bought a property. If you're buying when interest rates are going down, oh my God, all the interest rates are going down, well, that means that the economy isn't going so great. So you're buying when the interest rates are going down, but then sure enough, they're going to go back up. And you don't know how high they're going to go, and you don't know how low they're going to go. So if you're in the market and you want to buy and you think it's the right time to do it, often now is the time to buy. Now, you have things like a property clock. What a property clock is the top of the market and the bottom of the market. Now, yes, you do want to watch that and you want to make sure you're not buying in the top of a boom. But I can tell you now, from WA, if you look at over the whole time of property being in Perth, if you look at when houses were available 30 years ago, what the prices were and what they are today, they are miles apart. Absolutely miles. The graph goes up and down a bit, up and down, and but it keeps overall. It goes up and up and up and up. I was talking to a guy on the weekend, 2 weekends ago. I was chatting to a guy who came over to our house. He's looking at buying something off our house, buying it off us. I was having a chat to him, an older guy, and he lives in East Fremantle. And he was telling me that he bought a property in Vic Park for $30,000. This is a long time ago, right? 30 grand, a long time ago, right? And he sold it. I think he said he sold it for $70,000 a couple of years later and made a killing. He thought he had won the lotto, and he was so happy with it back at the time. And now he said, quite honestly, I just wish I'd kept it. Obviously, now property prices keep going up. However, there is no real great time to buy. So if you're going to buy a property, you need to make sure that you're buying for the right reasons and you're not getting caught up on a good market or a bad market. At the same time, though, is that if times are getting tough for you, but you can hold on to that property that you got, maybe it's investment or whatever, don't dump it too quickly. Don't get rid of it. Oh my God, we got rid of it, because you do have to pay often sometimes capital gains tax, or you do have to buy another property that's going to cost you money doing that as well. But if you dump it too quickly and you get rid of it and then interest rates come back down again or the war's over, then you sold a property that might be a good investment. Now, if you're stretching yourself too far and you are truly worried, yes, make sure you look after yourself. You do want to be able to sleep at night, but make sure that you're planning for the long term, not reacting to the short term. Okay. If you put your property on the market at the same time as everybody else because you're getting really worried, well, you're not going to get a great price because the market's going to be flooded. So you want to pick your timing properly, and the way to pick your time properly is to not overstretch yourself. So now to talk more specifically about building, extending, renovating. So what happens with building, extending and renovating? Where you can get caught, and this is where you can overextend yourself, is when you don't know what the hidden costs are. And the hidden costs are things like what's not included in the home: flooring, blinds, painting, air conditioning is the ones that most people will tell you about. But you got site works. What's your block like to prepare to build the home on it? Most builders won't include this or put provisional sums, which is just an allowance. It's not a quote for these things. Do you have, turn the sand over and get it compacted? Do you need to put retaining walls in there? Do you need soak walls? Where they're going? How hard's the ground? All these other things are the unknown factors, which most builders, if they know what they're doing, will be able to give you a good idea what they are, but you really want to find out as much as you can or as close as you can up front, because you don't want to commit yourself with money and deposits and signed up only to find out 2 to 3 months later, oh my God, we didn't allow X amount of dollars, and then it blows out and now you've overextended yourself. I've done this for a long time. We found a car buried in someone's backyard. We can't see everything. We had to pull that car out and put new sand in there. You can't predict everything, but you want to get as close to that as you possibly can to try and determine what that is. So this is what our business independent building advice, we try to do all these things up front to give clients a really good idea of what things cost. However, whoever you go to, whether it's us or somebody else, you want that person to give you the real information as close as possible so you can budget possibly and not get caught. Now, that's something you want to do with your planning stage, but then you got things that's happening at the moment like the war. Now, the war in the Middle East is really affecting petrol, getting across the globe for all different countries, and then what's going to happen is when that opens up, everyone's going to be fighting for that petrol, all the different countries and getting that. And those, I was reading about the other day that those ships actually go at 15 knots an hour. They're so slow at getting anywhere that's going to take a long time for any of that petrol to come to any of the countries out there, and that's going to have flow-on effects. And that flow-on effects actually affects other people indirectly. So it might be that things that can't be produced in places like China and that come to Australia, and that might hold all sorts of different production issues out there. Which means, though, that the builders who are pricing homes, they're being affected from all different directions from all their suppliers. All their suppliers, their supply chains for themselves is all being held up. So therefore, and also prices are increasing with petrol, which means that it affects them. So a builder might be sitting there today, they've priced your house and your house has come in at, let's say, $600,000, and they go, that's fantastic, and they give you a quote today and it's a fixed price. Well, guess what? Next day, just 24 hours later, they get hit with 7 different bills from 7 different suppliers saying our prices are going up 10%, 15% on all our products straight away. Well, all of a sudden, that from that builder's perspective, their profitability has just disappeared in all their supply hikes. So what that means to you is that the person who signed yesterday, they don't have to wear that, right, because they signed up with that builder. However, that builder's going to cop it. And what's going to happen, though, is before they go to site, that builder's going to redo all their numbers to see, are they still going to be profitable when they build the home? And if they're not profitable, they'll have to pass on that increase to you, the client, otherwise they're going to go broke. Now, let me just put that in perspective. If that builder is building one house and it's just your home, and let's say they were going to make 10% profit on the actual home, that was their plan, and they lose a lot of this profit and they only make $5,000 profit, well, that's a lot of work for a very little profit, but let's say it's 5%. But if they actually got to the end there, and that'd probably be okay. They could probably make that work, and these things happen, and they could probably live with it. The issue is though, if that builder has 10 houses all that site at the same time, and they got a lot of overheads, and they cop that with 10 different homes, they are in a world of pain, a world of hurt. And from you being the person buying it, I can tell you now, you are much better at that builder staying afloat and being in business, right, than them going under, because it's very expensive. We help people all the time whose builders have gone under. They come to us and we help them find another builder. But there's delays in that. There's cost differences. The new builder is taking on another job. They have to allow for that. There's a lot of things affecting that. So you want to make sure that your builder is profitable. Now, there's two different ways that builders generally price homes. One is a fixed price. The other one is cost plus. Fixed price means that whatever price they give you, that price is fixed. And then when they build the home, the price isn't changing for the fixed prices. There might be a few provisional sums in there, but most of them are actually fixed pricing. So that's one way they can do it. The other one is cost plus. That is whatever the cost is, plus margin, plus GST is what they're charging you. Now, cost plus is incredibly dangerous in this market for a client's perspective, really good from a builder's perspective, because if prices go up, that's the client's problem. If the build prices go up, it's not the builder's problem. He just passes that on to you. It's so dangerous from that perspective, from a client's perspective, that the banks actually won't give you finance for it. They won't accept that. Okay, they want a fixed price. They want predictable income and predictable amounts, and so do you. Another way, a third way that's emerging at the moment, which I'm actually pretty cool with, and that is that what builders are doing is they are fixing the price for most of the homes. So things like brickwork or concrete, all the things that they will happen towards the start of the build. But what they might do is provisional some things like the kitchens or things that are going to happen later on in the build. And the reason for that is what they're doing with those figures. They're giving you real figures, and you certainly want your consultant to actually cross-check that for you. But what they're doing is saying, look, we think it's going to be this, but we don't know how much the price is going to change. We want to reserve the right to alter that price if we need to, closer to that time frame, so that we can be more specific with that. Now, that's not just a case of them giving you another piece of paper. Oh, your new number now is $100,000. That's not how it works. They need to show you what they had originally allowed for, what's changed and why, show you the letters from their suppliers going, oh, the price is going up. And I don't mind that so much, but that's going to be a controlled environment, and you absolutely want an independent expert helping you with that sort of scenario. Now, if you're a first home buyer, that shouldn't be a case at all. I'm talking more so for a more advanced, complex home where you're building a 2-story, more deluxe lifestyle. That's more where the realm that I'm sort of talking, because there's more delays, more time, and the longer it takes to build the home, the harder it is for a builder to predict it. So should you build now, or should you wait for this war to be over, the dust to settle, and then buy, because prices will surely come down, right? Well, if anyone, and it's normally friends and family that too, wait till the war's over if the prices have come down, and then you'll save a whole heap of money. Well, that's never going to happen. That's never happened before. It's never going to happen again. I've been through three booms, and what happens is, if let's say we go into complete meltdown and bust, the builders are going to probably discount a little bit, but they might discount only a fraction of the cost of building, and then you'll find that they'll find other ways to actually include things. The whole saying is you don't get anything for free. Well, that is 100% true in the building industry. If somebody is giving you free air conditioning, they're including it in the price, right? It's just a marketing gimmick to get it across the road. Prices don't ever come down. Suppliers don't turn around and go, oh, do you know what? We've been overcharging you. You know what? We're going to give you a discount from now on. They don't do it. Never happens. So if the prices go up, the building price is going to go up, and I really don't think you should be waiting for them to come down, because in my experience, they don't come down. So when it's the right time to build? Well, not to be a cliche here, it's actually now. The price that you're paying for now is only going to get worse. And if you go with a good builder who's allowed for that, and they fix the price today, you're not going to get a cheaper price in a couple of months' time. I absolutely assure you of that. Now is the time to do it if you're going to do it. Now, if you're worried about the war, you're worried about what's going to happen, all these kind of things, well, then maybe hold off. But you will be paying a premium. Since COVID, and I'm ignoring the first probably 18 months of COVID when prices were going nuts, but since then, I've been saying to people, allow about 1% increase per month for every month that's delayed from when you sign up. So I'm not telling people to rush out there, but that's roughly what the price has been going up for up until the start of 2026. At the moment, I'm saying for people to allow about 1.5% per month, maybe a bit more, per month on their job for prices to go up each month. So I'm not saying rush in, but when you sign that preliminary plans agreement, that first, and you pay your deposit with that builder, that fixes that price for you, which means that the sooner you do that, the cheaper it's going to be. If you want to wait 12 months, well, you're looking at adding probably about 15 to 17% more than what you're paying now, maybe even higher than that, maybe 25%. So just be wary of that, because that's definitely going to happen. Because when a builder fixes a price today, they don't know what it's going to cost in 12, 18 months' time, 2 years' time. So they're going to guess. And they're going to guess and they're going to round it up just to cover themselves. So they're going to fix that price and go, okay, I don't know what's happening. I'm worried. I am now going to price it so I've covered myself just in case. And they don't want to come back to you. Most builders don't want to come back to you and ask you for more money. They don't like that. It's a horrible scenario. You don't like it. They don't like it. But they need to do that to cover themselves. So you need to make sure that, so those builders that are allowing for that need to make sure that they are profitable and in business. Okay, and that's what they're looking at. So if you do want to build, you do want to buy, and you're waiting for prices to come down, for the war to be over, for the dust to be settled, for the whole market to be perfect for you to buy, it's not going to be. And I wouldn't wait, because you're paying a lot more, okay? And if you really want to wait, you need to relook at what you want to do with your home, and you may have to make major compromises. You might have to do a smaller home design, lower specification, all those kind of things. You might find a cheaper, nastier builder potentially that's going to not charge as much. You're going to have to compromise on what you're getting, or you have to increase your budget dramatically to cater for that in the future. I have never in my entire 25 years ever had a client come back to me 12 months later, 18 months later, ever, and say, oh, we want to go ahead now, and I've gone, guess what, it's cheaper. Almost always we have to add like large percentages. We'll go back to the builder, get them to reprice it properly, and generally it's 20, 30, 40, 50, 60, sometimes $100,000 more than what they originally had if they'd gone ahead originally. So up to you. I'm just trying to tell you straight what I'm telling you. You can ask any builder out there. Everything I'm telling you is 100% accurate. If you wait, it's going to cost more. You've just got to weigh it up whether you're in the right headspace for it and if you feel comfortable doing it. One last thing to think about as well. If you're going to delay, if interest rates go up, it also means you can borrow less. Okay, so what that means is the banks work out how much money you earn, and they go, okay, of how much money you earn, X amount you must need to live, and then any Visa cards, credit cards, any debt you've got other than that will then be taken off your actual ability to service the loan. And then at the very, very end of that, what money do you have left for that? So if the interest rates go up, you're paying a higher repayment on the home, and therefore you can borrow less money. So you might go, hey, I want to spend less money because my repayments are limited that I want to spend. Then you look at buying something in the future and the interest rates have gone up. Well, guess what? You now, not only can you afford less, but you also can't borrow as much. And you'll find that what you want to do or what you can do today, you actually may not be able to do in the future. So just be wary of that. But let's just sum up here. What I'm saying to you is have a plan first of all. If you're not sure how to plan properly for your build or buying, even I'm talking about buying established here as well, come chat to us. This is what we specialize in doing. We can help you. But if you're going in alone or if you've got someone in mind already, you want to have a plan. Work out what you would love to spend, what you're really comfortable with, and then what's the maximum you would go to. And a great way to ask yourself that, let's say your maximum's 900, and you ask each other this question, you go, if it comes at 901,000, will we not go ahead? And if that's the case, well, then that's great. Work out what your maximum is. So then when you're going looking at property, looking at pricing, go, okay, this is what I'm comfortable with, go from there. Reverse engineer it. Work out what it would cost to have everything included that you need to do to that property, whether it's established, building, extending, and then go, okay, what will those hidden costs cost? Does that match up with our budget? And then, yes, we can do it or not do it. So make sure you have a plan. B, there's no perfect time. There is no perfect time, right? If you wait for the perfect time, you're going to spend a lot of money and you'll be doing something in 10 years' time and go, well, we'll just give in because we can't do it. So go out there and buy something if you're in the right position in your life to do that, because interest rates are going to go up and down, war's going to come and go, petrol prices are going to change. It's just the way the world works. Up to you though, right? And the reality is though, if you want to get into the market and you want to buy, it's not going to get cheaper. Don't think down the track the prices are going to drop, okay? Please reach out to me if all of a sudden all the prices drop of housing. But I'd love to know about it, although I'll probably know about it by then anyway. It just doesn't happen. It hasn't happened historically. I can't see it happening again in the future. So it's not going to get cheaper. Up to you when you want to buy, but it won't get cheaper than what it is today. Hope this helps. We're here to help you. If you like what we did today, or you've got agree with me or disagree with me, please comment below. We'd love to hear your comments. We will respond to them. At the end of the day, Home Building Podcast is just trying to give people real, straightforward information, practical advice. If you want help with your building or extension, you want to have a chat to us, independentbuildingadvice.com.au, reach out to us. Just love to have a chat to you. But at the end of the day, it's about you building the best thing for you and your family. Thanks.